I'm Bernie Thurston, and this is the Thing About FinTech. The reason why I set up the company is the one thing I'm not allowed to do anymore.
I think founders quite often set some things up because they love to solve those problems and get involved in the weeds. And actually moving away from that and moving into a different role. But some people really struggle with that.
You've twisted that model, so you're actually using this technology to empower your business.
From a technology side, by default, your answer is always no. So you move into the sales side and go yes the whole time.
Hello, and welcome to the Thing About FinTech with me, Anvar, Karimson, and my co-host,
Toby, Babb. Today we are here over at Ultumus, and it's my great pleasure to introduce you to Bernie Thurston. Bernie, how are you?
Thank you very much. Great to see you again.
Listen, lovely to have you on here. Ultumus has been on a hell of a journey since we first met.
Has, yes.
I think we first spoke probably right in the middle of COVID, wasn't it?
Yeah.
And I had you on another show at that sort of stage. Ultumus has been on a hell of a journey subsequently. It's your
Successful journey.
Successful journey.
Yeah.
A successful journey. It's your third startup.
Yes.
Your third baby.
I think fourth, actually.
Is that right?
One was a charity event, so that doesn't count, but if it's not, fourth overall.
It counts to everyone in the charity. So, look, loads to unpack today. You're a great character. I've loved watching you and the business.
Don't mention
grow.
the suits.
Let's kick off with a little bit of the inner box of what Ultumus is all about.
Certainly. So in terms of, Ultumus was effectively found first and foremost in terms of as a data company. So we focused effectively on the aggregation of index and the ETF data. So we've managed to accumulate over 3 to 4 million indices on a daily basis. We accumulate 15,000 ETFs on a daily basis from all over the globe, all different time zones, and create them into a consolidated feed for use by APs, market makers, and investment banks more than anything else. In terms of a very bog standard service, but actually very complicated, just use the various calculation methodologies, reference data formats that we receive them all in. It's quite phenomenal. However, whilst we were doing that, we realized that some of the data we received wasn't of the quality that the market expected. So we actually then found our second line of business, which was our PCF calculation business. So in terms of we run calculation as a service, we're now probably the largest ETF calculation service globally. We do it for various organizations across Australia, Asia, Europe, and North America. And we just calculate the PCFs on a day-by-day basis. Following on from that, we then created our third line of business, which is our creation redemption service. So we've created a creation redemption service now utilized again across the globe by a number of organizations to process their ETF creation redemptions on a day-by-day basis. So from what started off as a very simple basis, it's got more complicated as we've gone through, and it's been a very interesting journey, and being able to work with the ETF participants to create that has been an interesting challenge, particularly as we've gone further and further down the service side more than anything else. And our client base has changed over that time as well.
Yeah, isn't it interesting how that sort of I think that this development of companies and the iteration of companies has been much more commonplace over the last few years.
It definitely was.
I think people used to stay in their lane, didn't they, always before?
I was going to say, it definitely wasn't on our business plan as we started the organisation. We were very much, and following my previous companies that I created, we had been, the whole data aggregation is a area that requires quite a lot of skill and technical capability. Doing that was effectively the major driver behind the business. But then effectively these other businesses came about because of necessity within the market more than anything else, in terms of we've become such a specialist within the ETF space as it was. We then naturally evolved into these other things, and it wasn't part of the original plan. These things just evolved.
Yeah,
So.
yeah.
and I guess you're quite unique in the sense of you're extremely technical, but also very adept at the business side. How do you go through that journey? I mean, how do you start to build something and then end up pivoting into multiple other areas?
Well, and I think it's quite interesting in terms of, yes, I started off as effectively as a IT networking guy. I helped design Sky's first interactive television network and everything else. But the differentiation between technology and finance these days, I think the line is becoming blurred, to say the least. I was dragged in when I was the technical project manager at Babb, the organisation that was bought into market, became the market equities division. I was the technical project manager there, and effectively I evolved from effectively being the technical project manager. I was then being dragged into all of the sales calls. I was then became head of client services, and from there I then evolved into being the MD in charge of the equities division. So from my side, the actual evolution changed, but effectively the only thing that really changed from my side was from a technology side. By default, your answer is always no. To move into the sales side and go yes the whole time. Well, that was effectively the major change associated with that in terms of and again, from my side here, my technology guys keep shutting me out of all of the technology in terms of I know enough to be dangerous these days. I don't know enough to be useful in terms of, and again, from a founder, obviously I set up all of our AWS accounts and everything else. I lost access to them, and effectively I'm actually banned from actually accessing them about 3-4 years ago because effectively it was too dangerous. I had too much information, and effectively as our company's grown up, we're not allowed the founder to just go in and mess around with data. So in terms of those controls and constraints have now come in, and unfortunately these days I'm not allowed to play with technology the way I used to.
How do you feel about that though? Because that's an interesting thing, isn't it? As you go through, I think founders quite often set some things up because they love to solve those problems and get involved in the weeds. And actually moving away from that and moving into a different role, some people really struggle with that.
Oh, I do completely. In terms of, it's the one thing as a founder I found very interesting / frustrating. The reason why I set up the company is the one thing I'm not allowed to do anymore. So in terms of play with data is what I love to do in terms of I enjoy seeing how these things evolve and everything else, finding issues with them, so on and so forth. But effectively these days I spend half my time in legal meetings, accounting meetings, and client meetings.
Yeah.
The 3 areas that I'm probably not my forte, and the first 2 definitely aren't. But effectively that's where I now spend 90% of my time, and effectively they're the things that I'm actually not good at. But effectively the thing that I am good at is the thing that I actually had to leave behind.
Yeah, but I think you're also able to then, whilst it's you in those meetings, you've also assembled a really strong team of people who are strong in those areas, and that's always been the key part.
I was going to say, and but again, yes, I have created a very good team around me, and in terms of some of the people have worked with me for multiple years, decades associated with this. But it's also, from a founder perspective, just being able to let go, I think is the most difficult part in terms of allowing them the freedom to get on and do it, and coming back to them saying things and going, why did you do that? Without using that tone, is the most difficult part going forward in terms of some of the things you've just got to realise that you've got to let other people, then they're responsible for it on a day-by-day basis. You may not agree with it, but they have to then run with it. In terms of it's been very interesting from that side, and unfortunately, it's coming back and having a look at the data and everything else. It's the part that I still enjoy. Unfortunately, I spend too much time looking at legal contracts these days.
It's always it's a evolution, isn't it?
But unfortunately, I think this is one of the biggest issues we've got with startup companies these days. In terms of I now spend so much time on RFPs, due diligence documents, financial due diligence documents. In terms of the trying to sell into large organisations. I assume if you have to go through a procurement process with a large institution, you're looking at the timeframes of 18 months.
It's the strangler of small businesses, isn't it? And I think that's something which people consistently underlook about that whole procurement process. And I remember maybe 12 years ago we did a panel, and there was a good friend of mine who was fairly senior at a major tier 1 bank at that sort of stage, who very, very kindly sort of sat in front of everyone, and it was a room of about 150 people, many of whom were tech founders. And it was like an angry mob with pitchforks talking about their irritations with procurement. And his point was, there's nothing you can do. There's nothing you can do about it. You have to build it in. And I think the companies that have done well recognise that sort of stuff and build the runway to know that it's not, I've got a great product, so it's going to work.
And I think obviously this has changed over time. Previously, we used to get contracts from the head of desks and things like that. That control process has clamped down in terms of you can't do that anymore. When I started this 20 odd years ago, yes, effectively a head of desk could sign off on it, and because they were the ones utilising the data. These days we have to go through a process, procedure, etc., associated with it. And yes, there's no getting around it. And I think that's one of the things that, even if you've got the best product in the world that everyone wants to utilise, you're not going to be able to get it into these organisations. Like we're just doing one for one of our organisations. They are desperate for the data. We've given them access to the data. They're not allowed to utilise it because they haven't been through the procurement process. They need to have the security due diligence signed off first and foremost. And no matter, come on, mate, that's a 3-month process. And I was going to say, and I don't think a lot of founders who haven't been through that process before, and again, this is one of the issues that you run into, as in the people who've experienced that have come from startups anyway, and have been through that process. Anybody coming from a large organisation think these things just happen. And they really don't. It's that whole idea in terms of people who have actually been and experienced it. Yes, we'll build it into the runway process. Anybody who is coming from a large organisation
has this assumption.
And again, the people that they normally engage with will be people who've already been onboarded for the procurement process, and all of those time frames will be a lot shorter. And again, they say, once you're onboarded, it's a wonderful moat, and then things accelerate from there. And getting the money out of the organisations, once you've been through the first payment cycle and everything else, it becomes a lot more efficient. But that first cycle,
it's hard,
is hell.
So if you think that one of the sort of stranglers of companies is that sort of procurement process to get through at the start, the other point of failure generally is around the partnerships they make in terms of investment. And I think that's something that you've done incredibly well here.
I was lucky.
Amazing how many successful founders called. It's like luck is one of their things. It feels like there's something.
Listen, I think I'd set up 2 startups prior to this, but it is that whole thing in terms of I'd never actually been a founder. So I was previously working for VC companies and everything else, and that was an experience in its own right. But you never had the fundamental pressure. And you'd had somebody else who was responsible for facing off against VC companies. We were very lucky in the fact that the VC that backed us was actually within the ETF space and actually had knowledge associated with it. We gave up too much equity for the amount of money that we got, but effectively we retrofitted that further down the line. And I think we were very fortunate. In hindsight, it's easy to say, we didn't take too much money. And I think this is the conversation we had in terms of trying to understand how much money you take as a founder. Your initial idea is that, right, I need as much money as possible to give myself as much runway. But I think that whole idea in terms of trying to understand your runway versus revenue versus, as we just said, the burn rate associated with getting onboarded with clients is a very difficult criteria.
And it's got to be absolutely on point as well.
Yes, and then again, the one thing that you never want to do as a founder is take a down round associated with it. So in terms of, it's trying to make sure that you, and again, as we've just alluded to earlier on, our business model changed quite drastically over the time as well. So being able to change from a data as a service company to a software as a service company changes all of our metrics as well associated with that side. So it was we had a very friendly VC attached to ourselves. And again, fortunately, because we were set the way we were set up with a VC as our backer originally, again, we needed a VC backer specifically buying all the index data licenses in. That's not a cheap cost associated with that side. So, but we were very fortunate in the fact that we set our company up with the due diligence in mind. So we had all the procedures, processes, the employee onboarding, offboarding processes already done and dusted. We had our child slavery processes already documented and everything
Amazing
else.
what you've got to think about, isn't it?
Well, again, they're very simple, but if you don't have them, and again, these things, our legal company was able to produce very quickly and easily. They were obviously very templated, but making sure that everyone had signed them, people refreshed them, the cybersecurity document every year, going through that whole process. It's things that, again, I didn't think of as a founder. And now we've got very procedurally driven processes to make sure that they're part of our HR onboarding process. Everyone has to sign them, everyone has to renew them every year. And again, it was the fact that fortunately our VC got us set up in that process. So before we went through a sale process or anything else, we actually had all the documentation done, and we had 5 years worth of information associated with it. And it's all these things in terms of, as a founder, you expect that the company and the product to be the most important, but the due diligence process, exactly the same way as we were just talking about the onboarding with those individuals, the actual due diligence for a sales process is even worse. And I did it all during COVID, which was an absolute nightmare.
And trying to retrofit some of those things must be really difficult, going into a sales process and not having them, and having to pivot back and claw back while you're trying to sell the product as well.
Well, and I think that's the thing in terms of, we were very fortunate in terms of we actually had, I'm never going to say you had 100% of all the things that we were being asked, but us being able to face off against an exchange when we were going through our sales process, and we were able to address probably 80% of the questions straight off the gate on that side, in terms of we were very well structured on that side. But yes, the 20% was hell, because you're trying to make sure that you're trying to retrofit those things whilst running your company at the same time, whilst doing a sales process, in terms of...
Whilst dealing with COVID.
Whilst dealing with COVID. As in, I think I put on 2 to 3 stone in weight during that process, because I was working 18 hours a day, surviving on chocolate and Coca-Cola, just because I was trying to do my job, trying to do those retrofits, and trying to do all the presentations and sales as well. It is
all-consuming. Everyone who speaks to me, they say that you sort of give your life to the process.
And again, I think if you don't have those documentations available on day one, it extends that process. We were very fortunate, as in process for myself was about 3 months from beginning to end, which is a very quick, easy process. In terms of, I've seen other organisations that go 6, 8, 10 months associated with that. And that whole, and it's a grind in terms of,
especially when you see the sort of runway, creeping over that sort of period as well. There's a lot of distress around that sort of thing.
Well, and again, if you're trying to retrofit things as well, and lawyers are not cheap. And unfortunately, you do.
They like to take it as long as possible.
I was going to say, and again, I was very fortunate in terms of the VC company had a lawyer on their board, and effectively, without overstepping, he was giving me very good advice during that process in terms of, by the way, yes, he was separated from us. They obviously had their own idea, concept behind what they were trying to achieve, but he said, trying to control your lawyers is actually a very difficult process, because they will raise up every objection possible during a sales process. You're smiling at this point, because they have to give you a warning, but you have to distill down which ones of those are critical to yourselves, and yourselves being, if only the other people are being dragged along with you, and also yourself if you're being tied in, and actually doing that distillation, because if the lawyers will bring up 200 different points that are issues, because they have to cover themselves. But of those, you've got to go, right, which ones are actually critical to me, and maybe 5 to 10 associated with that side, which are critical, and you would then focus on them with the opposing lawyers, should I say. It is a process, and not one that I ever want to go through again.
You've done it. You've done well with it. And I think we're talking about that selection of partner, that selection of acquirer, that selection of investor, I think is incredibly important. And that the alignment is critical. You obviously sold to 6, and we were talking beforehand that it's been a really strong partnership, a really strong play. It's worked out really well for all parties. Talk to us about that selection. Like, what made that the right sort of call? Because I imagine it was, there are people who sell under duress and have to go for any partnership. That usually is why we have such a huge failure rate at Series A, B, C, etc., because people go in there and they do it because they've got to, and they've got to, they see who's going to pay them. There's misalignment between the agendas of both parties. Interestingly, I think Six have sort of said, it's your kingdom, you're the expert, go and do it. And that feels like a really good partnership.
Yeah, and listen, this has evolved over time.
Yeah.
Effectively, we were very lucky with Six and Marion Leslie, who was actually in charge of the BFI group at that stage when they purchased us. There was very much an alignment in terms of data focus, client focus, et cetera, et cetera. But again, we went through a process in terms of to sell the company. There was about 3-4 different bidders associated with it. And from our side, and it sounds stereotypical, but effectively Six was the most procedurally driven. They effectively did everything that they said they were going to do. Again, from our side, there was numbers being bandied around, but effectively Six was the only definitive one associated with that side. So, and they actually managed to hit all the timeframes that we set out, apart from the last one, which we extended by a week on that side. But if we were extending by a week, you're doing very well.
Yeah.
No one's arguing at that stage. But if that last contract...
It's about as Swiss as the timing can get, isn't it?
I wasn't one of the... But again, from our side, it was actually a very smooth process. They were very diligent, but they were very precise in terms of the timing. And effectively, we had VC companies and other institutions facing off against us, and other people drifted. They didn't actually hit all their milestones. We felt most comfortable with Six at the end of the day. And again, which
is important.
Yes, most definitely so in terms of it was the alignment of ideals more than anything else. And again, when we first started off with it, the idea was to integrate us, but as we evolved over time, and working with the board of Six as well, we realised the fact that due to the fact that the ETF market is evolving so very quickly, it was probably best to give us the freedom to focus on that particular area and allow us to pursue the growth of that market rather than pursuing the integration into Six, because obviously any integration, any combination of companies does take time and effort. We're still a relatively small little company, and we were focusing on effectively our market rather than our parent.
Yeah, and I think when you said something interesting there about the relationship you've got there, and I guess it sort of comes from being this small little company that's your baby effectively into being adopted into a larger institution.
I like the way you say adopted.
By nature. You're as a founder and an entrepreneur, serial entrepreneur, I guess you can call yourself these days, you become unemployable, right? And so I imagine part of that sort of process that also comes into your head is how's that going to fit? How am I going to fit into the hierarchy there, et cetera, et cetera? You talked about facing off to the board over there. That process has got to be right as well. And that can be incredibly frustrating for both parties. That creates
I think you've hit the nail on the head. I think entrepreneurs, to use your word, founder from my side, is the fact that fundamentally the individuals who start up to use the Steve Jobs quote, it's the people who want to change the world. They're the ones that are actually, and they are unemployable. They're not people that you actually necessarily want in a big organization. They're always riling against something. And again, we've been very fortunate with Six in terms of they are a very Swiss institution at the end of the day, but they've allowed us to continue doing what we're doing. And I would say we've mellowed over time in terms of there are significant advantages to being tied with Six in terms of, again, in my mind, financial due diligence. From my point of view, being part of a organisation that publishes all of their accounts online, when I face off against a large financial institution, they ask me for all of our financial records and we point them to a URL. Makes life a hell of a lot easier at that point in time compared to digging through your accounts for the last 5 years and having somebody else doing due diligence on your financial thing. That has been a major boon for ourselves. The financial diligence that they do on us, all the HR side, and all the marketing as well. In terms of it's enabled us to accelerate and be a part of the larger organisation while still doing all the technical stuff that we do a lot quicker. Our agile methodology, we have releases every week associated with our side. versus that's obviously not going to be applicable for a large exchange or anything else of that ilk.
That's such an important combination, isn't it?
Oh.
That you've been able to do that.
Yeah, and I guess from that perspective, you're also spending years building up this culture of, that ties into the technology because they go hand in hand, and it's having that culture survive in a larger organization, which culturally might be slightly different.
And I think, and unfortunately, we've managed to evolve, and I think from our side, I don't want to use the phrase canary in the coal mine, but effectively we're utilising new technology these days. So from our side, we're currently doing some new things with AI and everything else. And trust me, I don't think AI is the big saviour that it's associated with. But from our side, the fact that it's now tied into our Office 365, it's tied into our CRM system and everything else, we're able to produce reports for our clients, for all of our salespeople on a daily basis in terms of various technology. We're now building new technologies out, which Six is then taking back internally to go, okay, right, how do we do this? So we're giving them the capability of testing things without it being across a larger organisation. So from our side, we've actually created the, shall we say, dynamic culture, and Six is now utilising that as a way of going, okay, can you do this, can you do this, and allowing us to test things. And so far it's been worked very successfully for us at this point in time in terms of, I'm going to say the AI one is interesting in terms of I couldn't survive without my AI agent these days in terms of writes half my emails for me. But effectively, from my point of view, it's those type of capabilities and learning some of the new technologies that are out there. And again, we're very tied with AWS, going through that whole process, going through the security elements associated with this. And sorry, going back to our first conversation in terms of dealing with large investment banks and the like, where you're then using cloud technologies, explaining to them about, by the way, yes, our Kinesis stream does X, Y, Z, and the fact that, by the way, we don't have firewalls, we have web application frameworks and the like. Unfortunately, we talking about things using completely different languages and being able to go through and explain, and listen, one of our technical due diligence processes lasted over 2 years. Fortunately, they were using our product and we were just having to go through a process. But again, learning all that type of, there was no issues. It was just going through an explanation process and explaining the procedures that we had in place that don't necessarily fit back to a tick box exercise for on-prem solution. It was a learning process for both sides. Unfortunately, we've now learned that. We've got a 200-300 page technical due diligence manual, which we can now.
That must have been another one of the fun parts of your job.
Oh,
But brilliant to have.
this is what we're now learning in terms of having the actual documentation associated with it, and all these things that we've built up over the last 10 years associated with this organisation is making our speed of deployment so much quicker these days. In terms of the issues that we went through that first time around, where it took us 2 years. We've just been through another one of those processes and it took us about 3 months. So we were able to provide more documentation than I think they've ever seen in their life, because we learned from the previous time. We were able to answer the question, provide proof and explain it all in the same go, which previously that had taken us 3 iterations to go through it. Yes, nothing's changed in our technology, but the way we explain it, prove it and everything else has become a more refined process because now we've got all the documentation to prove it.
That's super refreshing to hear, because I think most of the times organizations build up these center of excellences, where that's AI or agile, etc., and these people who are decoupled from the businesses, but they're there to seed the businesses, whereas you've twisted that model so you're actually using this technology to empower your business, and then Six can kind of leverage that automatically without having to, and it's sort of it's a case study in itself already.
Well, I was going to say, in terms of what we've now discovered is that our, I'm going to call them sales juniors or anything else, they're actually very capable and they're better than I am these days. But eventually it's the fact that the use of the AI, when they get questions that are being fired across to them, they're actually able to go into our technical due diligence project and actually get all the answers out. Yes, they still come to our DevOps guys and validate them and everything else, but they're actually able to self-service now 90% of the time and effectively that's accelerated against RFPs and
It's
the like.
augmented junior.
Oh, yeah, in terms, it's developed
skill sets.
We recently did an RFP, and whereas previously I had to be probably involved for 90% of an RFP to understand the rationale behind the question and what question they're actually asking versus what they've typed up. The last one I was involved for 10%.
Yeah.
So in terms of through the use of AI, one, we think we're giving our more junior members of staff a leg up.
Yeah, absolutely.
Being able to answer the questions.
I think that's underestimated, that.
Well, from our side, like, listen, we're never going to get rid of people because of AI, but we think we're giving them more capabilities due to AI.
Yeah, exactly.
And I think they're also learning more, because whereas previously on these questions, they were just handed them directly. We're now being able to engage with them. They're actually understanding some of the things that they're coming up with and coming back to us with more complicated questions than they would have otherwise had to handle themselves.
I've been waved at twice now from behind the camera. I knew this sort of conversation
we knew
would
this
go.
was we're way off track.
Yeah, we need a 2-hour special for this to come through. But look, I want to finish with something which I think is really interesting, and we spoke about this just before we came on air. Actually,
we spoke about 20 things.
You are part of a stable of people who all came out of one place. And we were talking a couple of years ago, maybe a year or two ago, there was this thing on LinkedIn which listed all of the ex-market founders.
Yeah.
And it became a stable of founding excellence for companies that have gone on to do great things afterwards. And this, part of this series is actually sort of unlocking some of the secrets of what's made people successful in the industry, particularly the capital market space that we've been looking at. So if you think about what made that business a sort of catapult for founders such as yourself, and if you think about the lessons that you've taken, and this is a big question to finish up with, but if you think about all the lessons that you've taken on, you'd say, look, you'd be quite frank about saying, I don't want to do it again, all that sort of thing. But if you think, right, this is what you've got to think about to take this on board, to be successful, to navigate some of the hurdles, the stresses, etc., what would be your words of wisdom to pass on?
And I think it is quite interesting in terms of, like, was market the catalyst that created those founders out of it?
Yeah, or was it Lance and seeing someone do that sort of stuff from the barn and that whole story and everything like that?
I think it's actually the other way around in terms of Lance did a fantastic job, but acquiring companies that had that entrepreneurial talent in it.
Yeah.
And I think the one thing that I would say is, I think the way that they structured the companies and brought them together, I think that part was inspirational in terms of how they then integrated companies, and they did that very well and managed to enable value associated with that side. But as in the end, there was a number of people who, as they got dragged into that large organisation, which from my time it went from about 30 people to 3,000. I thought that was a large institution at that time. I think the last time there were 45,000 or something else of that ilk. But they didn't necessarily keep the founders at that stage, and I think that's the big part in terms of founders don't necessarily fit easily within those big organisations.
Yeah.
I think Market did a fantastic job of acquiring companies and making a cohesive whole.
Yeah.
But I think the entrepreneurs that were dragged into that organisation, I think it is a mindset, culture, or anything else within those individuals. They don't sit very easily within large corporate vehicles, and I think that those individuals already had that essence, shall we say, and there were certain companies that were founded and brought in, and those founders have then exited and redone it all again.
Yeah.
Some of them in different areas, some of them in exactly the same areas, like myself.
Yeah.
But it's the fact that I think we saw what was possible, and eventually we wanted to go and do it again.
Yeah.
We wanted the freedom, because that's the thing and when Market was in the 30 people, we had a lot of the freedom, but obviously as it grew, it became more corporate, as is the very nature of the beast. But effectively from our side, I think the people who want to do this want the freedom, they want the capability of changing the world.
Yeah.
And yes, those are the people that effectively, they're difficult to control.
Yeah.
They're difficult to fit into a corporate entity.
Yeah.
And I think
And they don't want to be.
They don't want to be.
Yeah.
But I'm going to say, in terms of, I do want to be in 6 because hopefully they've given me the capability of trying new things, building out new elements and going into new business areas without the corporate control. In terms of, we're doing things, we've got our own corporate identity within Ultumus, we've got our own marketing department and everything else. We are doing things that eventually the parent entity does not have the same flexibility to be able to do. We don't have the same compliance regimes and everything else, but we are able to build out things. So in terms of, I think, with 6, because we are one organisation, and initially they've just bought Aquis as well, and they're doing the same arm's length integration, whereby effectively all communication, all finance and everything else is controlled by 6, but the organisations are allowed to go and pursue their own objectives, which I think has been a wonderful change. And I think that's the only real way of controlling entrepreneurs at that point in time. And again, I think that's going to become more and more the way things are done in terms of with APIs and everything else for the sharing of data and everything else. It's allowing us to have that loosely interconnected systems more than anything else. And that's the way by effectively organizations can grow, they can leverage the other data that they've got. Admittedly, there's licensing questions and everything else, but effectively, from our point of view, that's effectively where we're sitting with 6 at this moment in time, whereby we're actually able to grow, pursue new areas of business without the control of a large corporate.
Perfect. Listen, a great conversation. Bernie, thanks very much for coming on board.
Much appreciated.
And thank you all for watching. We'll see you on the next episode of The Thing About FinTech. Thanks a lot.